We're back. We're back, everybody, with So What About Crypto? I'm Elsa Ramon. I'm joined by my producer, business partner, and friend, Bill Degnan, who asked the tough technical questions. And today we're joined by a good friend and developer of a company called Quantum RE. Matthew Sullivan is here with us on our podcast today. Hi, Matthew.
Hey, Elsa. Thank you for having me on.
Of course, of course. It's been a while since we talked. In fact, it's been about a year. The last time Bill and I saw you, we were in New York
In New
at
York, exactly.
Consensus.
We
and
were
just
outside on the street. They
and
kicked us
it
out
was
of the hotel.
freezing that day. It was in May. I remember it was raining and it was so cold.
Yes.
And we had to do the interview outside on the street there. But yeah, so we haven't talked in about a year about the company and the business and what you're doing, and just so people know, because what we're trying to do with the podcast, as you know, is invite everyone. This
Yeah.
podcast is not just for the crypto community, because we'd be in this big echo chamber, right? We all love what we're doing. We're all really passionate about what we're doing. But I want to explain to people that Consensus it was a trade show or convention, I should say, where all of these blockchain companies and developers and enthusiasts and everybody in between in the space came together to kind of share ideas and share their business and all that kind of stuff. So that's what Consensus was when I say that's where we were last year, just so nobody feels like they're out of the loop.
Yes, exactly. No,
But anyway, I
huge
digress.
show, yeah.
Matthew, it's great to have you here, and I love talking about what Quantum RE is doing. A lot of people who are not in this space hear all these kinds of buzzwords like, mass adoption, real case uses, all those kinds of things. And they don't necessarily know what it means. And I feel like a lot of that turns people off because it could be intimidating, or they feel like they know how their life is going now. They know how to, get a house or use a bank and they don't need to change anything. Why change anything if it's working for them? But Quantum RE took a look at the housing market and people who own homes and came up with an idea using blockchain technology. So why don't you give us a little explanation of that?
Thank you. Yes, I mean, let's start with the problem. I think one of the biggest challenges when you speak to any of these crypto or blockchain companies is if you ask the question that must not be asked, which is, what problem are you solving? Normally you have this sort of pin drop silence because the answer is, well, it's not about problems, it's about technology, but it's really about problems. And are you solving a problem? Are you doing something that changes the way people work? And the problem that we're solving is that if you're a homeowner at the moment, the only way that you can access some of the equity in your home is by going back to the bank and borrowing money. And if you cannot borrow money, or if you don't want to borrow money, then you're in a position where you may have potentially hundreds of thousands of dollars of wealth locked up in the equity in your home, and you've got no way of tapping into that. So we solve that problem, and we enable homeowners to unlock or pull cash from their home equity with a new financial instrument called a home equity agreement. And they're able to get a cash lump sum with no interest, no monthly payments, and no additional debt.
Now, I as a homeowner, and people, especially right now, unfortunately, who are finding themselves in financial situations because of the COVID-19 global pandemic, and everybody's watching their funds dry up, and it's getting scary for families. So something like this might pique their interest. But when I hear as a homeowner, oh, we got to take some money out of the house and we've got to get a second, we've got to go to the bank and do all the paperwork. It is a very grueling process. It's a stressful process. And that's just kind of what we've always put up with if we were in a situation where we needed to borrow against our homes. How is this different, and how is Quantum RE using blockchain technology to make that process completely different than what we know?
Well, the first answer is that we provide non-bank finance. So that means that we're not a bank. You don't jump through the same fiery hoops that you have to jump through if you're applying to a bank. We're much less, we're much more flexible, and we're willing to work with people. And the most important difference is that this is not a debt product. So you're not borrowing money. So rather than focusing on your ability to make even more repayments each month, and you've heard of phrases like the debt to income ratio and that sort of stuff, we focus much more on, well, what is your house worth? How much equity do you have in your house? And as long as we think that you're going to be okay continuing to meet your current obligations, then we can be much more flexible. Many people have paid off their homes. Some people own their homes free and clear. They don't have jobs. They don't have an income, so they wouldn't meet the bank's requirements, but they're sitting on a huge asset. So those are the types of people that we're able to work with. So we can be much more flexible. And we have a team that's in-house, so we don't have to throw it over the fence to a third-party underwriting team. We can, if there's some special circumstances, we can be as flexible as possible. So that's the first question. The second question you had was, how do we use blockchain? Well, when you create a home equity agreement, that agreement actually creates a real estate asset. And what we do is through the platform, we're building a marketplace so that people can buy and sell at some point in the future fractions or little pieces of these home equity agreements. So in the same way that you can have fractional ownership of art or fractional ownership of classic cars, we're using the same type of idea to enable these home equity agreements to be chopped up into tiny pieces. So if someone wants to invest into a home equity agreement, you don't have to be an institution or a multifamily office or a deep-pocketed accredited investor. Once we've got our platform and our exchange up and running, you will be able to go in and buy, let's say, $100 worth of one of these home equity agreements in a zip code that you know, in a location that you're familiar with.
So I wanted to ask you on that. Will that be sort of tokenized where a person could trade that, with someone else, maybe even, through different exchanges? Or is it just sort of a security that is only tradable on your platform as you foresee it? I mean,
yeah, the current plan is to keep it within a walled garden. So and we use the words tokenize and blockchain, and we use those very carefully now.
Yes, and please feel free to break that down and explain, because those are the kinds of words that people hear that and they're like, I mean, that's what I did. When I first started learning about this, I'm like, what does all this mean? It's just easier to walk away. So, feel free absolutely to explain.
Well, the best way of describing it is that all of that stuff happens behind the scenes. So as an investor, you would never know that we use that type of technology. And so it's very much it's a technology solution, and distributed ledger technologies, which use the blockchain and employ techniques such as tokenization, are in fact a very efficient way of managing the types of transactions that we foresee will be happening. So, and what I mean by that is, as people exchange ownership of fractions of these home equity agreements, in the same way that as people exchange ownership of shares or other types of securities, you need to keep track of what the trades were, when they happened, who the owner was, and who the owner is now. So that's a ledger effectively. Now, distributed ledger technologies, or which use blockchain, funnily enough, are a very efficient, cost-effective way of maintaining a ledger that can grow without having to spend a fortune on buying new servers. So if you compare the new type of ledger technologies to the old type, it's actually a lot cheaper, a lot more effective, and a lot more efficient. So we use that behind the scenes. Now, people know about cryptocurrency when Bitcoin was the first major outing for blockchain. Mm-hmm. So what we're saying is, let's not use those phrases. You really don't need to know that we use blockchain or Amazon servers, or we don't. You just don't get into the detail anymore, and that's, thank goodness that's happening, because then we can actually concentrate on what the product is and what the benefit is, and say, well, we know it works because we've found this really super efficient, cost-effective, scalable technology solution, which means that we can get to market, keep our costs down, and know that there's a record of every single transaction that happens that's kept in a way that we know cannot be deleted, cannot be destroyed, cannot be altered. And so we have this layer of truth, but all of that sits behind the scenes.
In the technology. And I exactly, I liken what you just explained to, I liken that to, say, us using ATMs or driving cars. Do we really have to know exactly what is happening behind the facade of an ATM, or under the hood of the car, every single detail of the engineering and how it works to deserve to be able to use it and to benefit from it? No, that would be insane. And nobody, hardly anyone would be able to drive a car if we were required to know every bit of technology under the hood and how it works. We just know cars changed our lives. We can get to and from places so much faster. It enables us to get jobs and have lives away from our homes, and makes life completely convenient for many of us to do that. And that's what Bill and I are trying to do here, is just take away, yes, if you want to know more about blockchain and delve into the technology of it, that's great. Enjoy learning about it. But on the other side of the technology, there is this benefit here that people need to see and not be worried about having to understand all that stuff.
Well, I mean, and again, thank goodness we're no longer having discussions about master nodes and nodes.
Yes, and hash rate and all that.
In which case we have to nod furiously, pretending we understand, but it really is as dull as toast. And thankfully the world has, although it is sort of suffering from what appears to be temporary insanity, before that, we are moving towards, what are the solutions? What is it doing for us? How does it help us? How does this technology improve our lives? And what it does for us is it has enabled us to contemplate doing something that would have been so much more expensive if we had to use traditional database technologies. Because as this thing grows, the amount of money it costs to build a platform where you can ensure that there's no double counting, or if somebody presses a button at the same time in two different locations, how do you make sure that you don't count that trade twice? So you have to build very, very expensive systems to prevent all of the things that that this sort of blockchain-based technology does naturally.
So basically, blockchain is eliminating all of that stuff that we would traditionally turn to a bank for, and streamlining it, and not only streamlining it, but making it even more secure when it comes to your identity, your information, the information you're getting, your transaction, your real estate, everything that's on the blockchain is secure.
Really, and again, it's a behind the scenes thing. It's just a really good technology for us. I mean, it doesn't work for some other people. So if you want to, there are other applications where technology, where blockchain is about as useful as a chocolate frying pan, frankly. But for us, it's fantastic. It's ideal.
I'm gonna steal that. I've never heard that before. I like that.
I'm glad I've done something good today. Yeah.
I digress.
But you see what I mean? So if you try and squeeze this sort of technology into applications where it's not relevant, then it just doesn't work. But for us, we go, well, this is great because And it works for us because it allows us to do things like contemplate or design this exchange, knowing that we can deliver it in a way where we don't have to go to the market and raise $20 million to be able to build something. We can do it for a tiny fraction of that. So for us, blockchain is a technology solution. And the end result of that is that we have a product, A, that helps homeowners unlock their equity, but B, going forwards, assuming that we manage to jump through the technology and the regulatory hurdles, we will be able to offer a platform to investors who will be able to buy a fraction of a home that is not for sale. And that's the interesting thing for us. We're able to open up a marketplace that doesn't exist, and that marketplace potentially is worth trillions of dollars. So that's what that technology has done for us. It's made it achievable. It's made it within our grasp. It's reachable. Whereas before, it would have been this gargantuan task to try and build this enormous machine to be able to deal with those transactions.
The important thing I want to point out what Matthew is saying is that to sum it up, basically, we can all be investors now this way, where that wouldn't have been a possibility for many Americans living today. I remember a year or so ago reading an article, I believe it was USA Today, saying that the average American family doesn't have $400 extra in case there's a family emergency, like a trip to the emergency room or whatever it is. And that was so sad. That was terrifying to me. I know that's how my parents raised us. They lived paycheck to paycheck, hand to mouth. They worked 2 jobs a lot of times. They could never imagine even talking about owning stocks or being investors in anything. That's insanity. We just needed a roof over the head, food on the table, and clothes on our backs, and that was it. That's how a lot of people are still living. And it seems that the technology behind Quantum RE is allowing people now to say, I'm going to buy fractions of these homes as an investment, maybe $100, maybe a couple of $100, and I can start building actual portfolio. This isn't just reserved for the people who have stockbrokers and traders working for them.
That's it. You have it. Precisely. Now, the only thing I would add to that is that this is work in progress. So what we can do today, if you're a homeowner, we can help you unlock some of your capital that's locked up in your equity without taking on debt. That's something we can do right now. The exchange, the fractionalization, the investment side of the business, we haven't delivered that yet. We're working furiously on that. We're raising money through Republic, which is a crowdfunding company, and that part of that capital will help us continue and finish the development. So the only caveat is that it's work in progress. It's a big task. Part of it, we've checked that box. We're operating, we're helping homeowners, but the exchange and the trading and the fractionalization, that's just a little bit further away, but we're very confident that we're going to be able to make it.
So how much have you issued so far?
Well, we've just a shade over $1.5 million is the amount of capital that we've unlocked for homeowners since we started in November last year. So we went live with our homeowner products in November last year. We also work with other companies in this space. So collectively, we've helped over 20 homeowners. We've unlocked just over $1.5 million, and we have $3 to $4 million of homeowner applications going through the process right now. And that's growing on a month-by-month basis. And again, caveat is COVID has impacted what we're doing. It slowed everything down. The investors who buy these contracts are kind of sitting on their hands at the moment, trying to figure out what's going to happen to the US residential real estate market. So, pretty much most things are slowed down to a walking pace, but we expect that to pick up, very quickly, very soon.
So, if you found that people are maybe starting to enter a phase of needing to access that cash?
There's a lot more willingness to tap into their equity. Something that Elsa said very much at the beginning was that people see that their home is sort of sacred, and they don't, they feel the sense of dread that they've got to go to the bank and fill out all these forms. And, and I think a few months ago, the equity was seen as something that you shouldn't touch, because if I wait a few weeks, my house is going to go up in value. So why would I even consider, tapping my equity now? We're seeing a real sea change in that. There's a lot more willingness from people to explore alternative options, particularly because the banks have really tightened their qualification criteria. The credit score has gone up to 720 if you want a HELOC. If your income doesn't meet this very tight requirement, you won't get accepted. And there's 40 million people unemployed. So, all of those things, if you're a homeowner and you have equity, then our approach, which is much more flexible, we don't mind anything like as much as the banks if you're not earning any money. So, yeah, and people now need money more than ever. So it is it's difficult, challenging, but there is this, this alternative solution.
So then, all right, so I'm still confused on technically what happens in, let's say I took $50,000 out and then use that for whatever. And then 5 years from now, I sell my house. How does that settled? How does a person, how does the investor or your group settle that contract? Is it because it's not a mortgage, or how is it? In a way, it is a debt. It only or it's a liability, so to speak, against that real estate asset.
Well, what you've done is you've committed to the investor that when you sell your home, a percentage of the current value together with a share of the increase in value goes to the investor. So categorically, it's not a debt. I understand what you're saying. You do have an obligation. In other words, you've got a contract, you've got a relationship now with someone who's bought some of your asset. So the difference is, with debt, you're borrowing money. With our product, you're effectively selling something that you own, and then you're just settling up with the investor at a future point. And the way it works, it's all to do with the value of your home. There are a number of different contracts with a number of different providers, and we work with all of them. But the common thread, or the rule of thumb, as it were, is when you sign the agreement, we figure out what your house is worth by sending out an appraisal. And that appraisal is instructed on a third-party basis. So everyone knows it's an independent valuation.
So you're not going to just pick some arbitrary number and say, yeah, I want to take a couple $100,000 out of my house here, buy it. But, you're validating that it's actually worth
we use
beforehand.
We use appraisal management companies, which is the same process that a bank or any lending institution uses to make sure that you have that independence, that you cannot choose your favorite appraiser. So the appraisal's done on an arm's length basis. We also triangulate that with other online. You've come across Zillow's Zestimate, and there are companies like House Canary and CoreLogic that provide independent research about what houses are worth in certain areas. So there's an enormous amount of information available to us together with the appraisal that gives us a very clear indication of what we think your house is worth at this precise moment. And what we then agree as part of the contract is, when you sell your home, which can be up to 30 years from today, we get back the original investment that we made. And if your house has gone up in value, then we'll share an agreed percentage of that increase in value. Now, if your house has gone down in value, we also run the risk of maybe not making any money. And if your house collapses in value for some reason, we also share the risk of potential loss. And that's very different to a debt product where the lender is always going to get his money back.
And so what if, and so that ultimately, I guess the exit strategy is, what did the house sell for?
Exactly.
And so as an investor, I guess you're at the risk of a homeowner. Maybe if they're desperate, you don't reap the same gains if they sell short, for instance, and they're just trying to get out of a property.
Mm-hmm.
You're sort of beholding to the decisions of that homeowner, correct?
Yes, but the great thing about us is our product is that we try and align our interests with the homeowner. So if you're a lender, you have very different interests than if you're the homeowner, because you don't really care what the home is sold for, because you're going to get your money back anyway, in most cases, because if you've got enough equity in the property. As a lender, you don't mind as much. But with the homeowner, there are ways that we can help the homeowner. If the homeowner is in a particularly difficult situation and we can help unlock a little bit more equity, that could prevent them from having to sell. And that's happened before. We find people, home equity agreements have been used to get people out of foreclosure. Because it's not a debt product, you're not adding to the mortgage, you're enabling them to tap into some of their equity, which pays back all the outstanding amounts that they owe the mortgage company. So they're two very, they're brother and sister, but they're very different products. But to answer your question, it is entirely possible that the homeowner may find himself in a position where he has to sell the house for far less. But remember, the homeowner is always going to have a big chunk of equity, because we only work with homeowners that have a minimum of 30-40% equity to start with. So it's not like the homeowner can just hand the keys back. They're going to lose out considerably as well. But there is that risk. You're absolutely right.
So what I'm hoping right now is what happened to me when I learned about the technology, the underlying technology, the blockchain. Once I understood how it could be applied to these real world companies like yours and services, it started to grow in my brain. Like, what else? Wow, this could touch every industry. And so I don't know if people, who are just learning about all of this, realize that this could be applied to a lot of assets, like you brought up before, artwork. There are companies that are trying to form so that they're able to sell bits of artwork so that you can invest in artwork if you wanted to, just like they would if they were investing and buying a piece of your home and cars and so on and so on and so on. And you start to see how large the potential is for people to start taking care of each other. People who need money sell little bits of their asset, and the people who want to invest, who've never dreamed of investing before, can apply little bits of their money to invest, and they help each other. And I'm hoping that that's what resonates with people, that when they see these types of services that are the services of the future, like Quantum RE, they're going to see how much it's going to impact industry worldwide.
And I think that's exactly right, because it's the expansion of the social contract. It's the leveraging of the crowd of people who want to be able to help, but they want to be able to get something in return. So if there is this concept of a win-win, so let's fast forward, a couple of years or so, our platform's up and running, you will be able to help homeowners unlock their equity. We won't need to rely on institutions or family offices to buy these contracts, because homeowners will be able to club together, investors will be able to club together, as they can do today with crowdfunding, and they'll be able to, each of them, fund a little bit so that this homeowner in aggregate gets what they need. And so there is this ability to disintermediate the existing institutions and bypass banks and other types of slow-moving and in quotes, old-fashioned types
if
of
people don't,
institutions.
I'm sorry, Matthew, but if it's still not resonating with people, we touched on it earlier, how cumbersome the process can be going through a bank to do all the forms, to get a second on your house, to get the money, the equity out of your house. But not only that, the enormous amount of fees that come attached with that. So really what you end up with at the end of the whole process is not that beneficial, or could not, potentially be not that beneficial. That's another thing I'm hoping people see the light bulb go off in their head, that, wait a minute, this middleman, this bank, all these institutions in the middle that get cuts of your stuff along the way to the, to the goal of getting some of your money out, or whatever the industry is. In this particular case, we're talking about homes. It's a long road, and everybody gets a piece of you before you get to what you need.
And the worst thing is,
eliminates all of that.
Well, it does. Well, it eliminates a lot of it. I mean, there's obviously a cost involved in the transaction, but if you know, the key word I think is transparency. When you go through a process, you don't really know where your costs are going. I mean, there's the general bucket of fees, or, costs associated with the origination of the loan or whatever. So what our platform strives, and again, this is stuff that we're building. So it's not available yet, but we are striving to build a completely transparent platform where you can make an informed decision as an investor or as a homeowner if you want to go ahead with what we have to offer, because on a line by line itemized basis what the cost is going to be, either today or in the future at some point when you sell your home. And that transparency means you can decide if this is for you or not. And I think that's all we really want to be able to do, is to completely cut out all of the obfuscation and cloudiness that's traditionally associated with these types of transactions, and make it clear.
Ultimately, I feel like, yes, we're talking about homes, but the bigger picture, which you are part of as a pioneer, harnessing this technology to offer the services you provide, or are building right now. The bigger picture is, once we apply this to so many different industries, the power of the economy and the power being able to control our own destiny much more financially is enormous. The potential for that. And that's the big picture. You and Quantum RE are some of the pioneers that are trying to harness that technology to take us there.
And it's just, the technology is part of it, but it's a different approach. The technology creates a change in the way that you expect things to happen. Because if now you can do something differently, then you start questioning, well, why was it ever done the way that it was done before? Right. And when you're shown a new way or shown a new possibility, there is this initial resistance to change, which of course is entirely natural. But then you get this acceleration of adoption. And what I mean by that is, if we cast our minds back to the world pre-internet, 20 years ago, 25 years ago, before we could do all our banking and all of our travel and everything online, we used to go to the physical banks on the corner of the high street, and I remember when the ATM machines first came out, which I probably shouldn't say because it does show my age, but and it would be a trip, and I would go with my father in his car, and we would go to the hole in the wall, and magically money would come out. You just think that's just fantastic, because we could do that on a Sunday. And so what happens is, with these types of technologies, they're a piece of the overall exchange. They're a piece of the overall fabric of change. They're not but it's the result of that is that we help unlock a $15 trillion marketplace. We enable money to flow from people who want to invest in residential real estate, to help homeowners unlock an asset that is gathering dust that they desperately need. There are obviously going to be charges and costs in that process, but you know what they're going to be. And the great news is that this happens as well as what is currently being offered by the banks. So we like the banks. We like working with them. We work hand in glove with them. This is not a competing product. It's a complementary. It's an accretive product. So we're widening the scope of products and the availability for homeowners to do something creative with their assets.
So before I ask this question, I'm going to state clearly that none of us are financial advisors, nor are we CPAs.
Yeah.
But with that being said, what is the sort of taxable event that may be triggered by doing something like this?
And again, okay, this is what we understand, but do your own research, speak to your tax advisors. So
Yes,
the research and the advice that we've had is that when you unlock equity using one of our home equity agreements, it's tax deferred. It's not necessarily income, but it's a tax deferred gain. So in other words, if there was going to be a capital gains tax liability if you were to sell your home, then that capital gains tax liability is deferred until the moment that you actually sell your home. But in the meantime, we are able to give you cash that doesn't have an immediate tax implication. So you don't need to pay tax on the money that we give you, but you will have to settle up finally at the point that you sell your home.
So what about the investors? What do they share of that potential gain, that taxable gain?
Well, the investors, what they have is they've invested at a certain amount. When you sell your home, if your house has gone up in value, then they will be able to share in a magnified percentage. So if your house has gone up by, let's say, 5%, then they might get 3 or 4 times that as their return, because as part of the agreement, they will get a bigger share of the increase in value compared to the amount of money that they invested. So the quid pro quo for the investor is, I'll share in the upside, but I will get proportionately more of the upside than you will, because I'm taking risk. Now, the tax position for the investor is entirely different to the tax position for the homeowner.
I guess what I'm really asking is, let's say at the ultimate sale of the house, there's a gain, irregardless of the fact that the homeowner took this equity out. There's a gain of $100,000. And yet maybe they have already taken $100,000 in equity out of the house. But when they sell it now will they be on the hook for that gain and all of the taxes surrounding it? Or is there a shared portion of that?
Shared responsibility,
agreement.
you mean?
Yeah, well again, yes. So in other words, the contracts have been designed to be very, tax friendly, as it were, for the homeowner and for the investor. So now, again, I'm stepping slightly outside of my skill set here, but you would, naturally, as a homeowner, if you have to settle up part of that agreement, if you've already sold some of your equity, then there's going to be a rebalancing. So, you're not going to end up having to shoulder all of the capital gains if you've already sold that off or part of that off to someone else. But again, this is the point where tax is one of those things where we sort of do tend to step back and say, please do your own research, because we just cannot give enough caveats, really.
Of course,
Right.
of course.
Of course. Always talk to your CPA, accountant, whoever you turn to for that kind of advice, of course. But yeah, Matthew, the company's fascinating, and the direction you're going and so many other companies are going with this technology is so incredible and so exciting. But what I find really incredible is where you came from and how you ended up here, and the fact that you have enough kids to have a baseball team. Because you have a large, lovely family, but you have been in business. And
how many kids do you have?
Is this the Spanish Inquisition now? I know I should have got a television at an earlier age, but I have 4 wonderful children. But I also I was married before, and I have 4 fantastic children over in the UK who still talk to me. Even
That's
today,
all we can hope for, right? As parents, that when they grow up, they still talk to me.
They still talk to me, and it's they are fantastic, and I'm incredibly lucky. But I now have 4 children.
One of them's kind of young, right?
Ranging from 9. One of them had her 9th birthday the other day, but I have a 9-month-old daughter as well, who has lungs like a vacuum cleaner. I can tell you.
It's really incredible to me, because all of us know the challenges of being a parent, but also as an entrepreneur, providing for your family. As a parent, that's really tough, but you've managed that your entire life. You have a pretty extensive background, a very impressive background. I just want to know more. I want our listeners to know more about you and the person behind Quantum RE, because it took a lot of experience and growing to get you where you are today.
Yes. I think so someone's just about to walk in then. Sorry, I thought I was going to have one of those BBC moments.
In fact, one of the children we're talking about now is about to walk in.
Listen, I've got it easy, okay, because my wife is the one who is busy trying to corral the children and the dog, saying, just quiet, he's on a call. So, I have to, just on bended knee explain how, marvelous she is. But here we go.
Hi.
Hey there.
It was bound to happen at some point.
Of course. I think we've seen throughout this whole lockdown experience, we've got to peer inside people's lives more than they wanted us to, doing all of these Zoom calls and podcasts and all that kind of stuff.
It's like, thank goodness that now we don't have to be embarrassed that we actually do have children and they can work. We can sit them on our lap and say, look, it's the wonders of but no, I remember the point way back when I wanted to be an entrepreneur, and it was really just this. I remember I was being a stockbroker. I was a stockbroker at the time. We were breaking the Far East markets. I was just thinking, there's so many pieces. I want to get involved in this, and I don't want to just be the salesman, talking about companies. I want to, there's a technology piece there, and there's this piece, and there's that, and we do this, and can I get involved in all of that? And my boss at the time, rightly so, said, no, just do your job, please. And my head was spinning, and then. It's just this sort of, I'm not sure it's creativity, but it's that you just see something, you think, I could build that, or I could do that better, or I'd really love to get involved, or you get, how come you're doing this? Because I want to do that. So I think really it's this ability of becoming congenitally unemployable. So in other words, I decided at an early age, early 20s, I was unemployable because I really could not be of any use to anyone for more than 5 minutes without going completely off track. And then I just decided I wanted to build my own company, really, because I thought I could do it better than anyone else, which is this sort of strange, focus that entrepreneurs have, which I think you need. But then you need to be able to stick with it. So the worst thing is that the payback, the quid pro quo is, okay, you've started this thing, so you've got to see this through, because no one's going to bail you out. So if you start something, it's like, okay, I'm kind of stuck with this now, so I've got to make it work. And that develops into something which is where, okay, so the world's fallen apart. We're in the greatest recession known to man, but so what? That's not a problem. I'm sure we can find a way through this. There's got to be the bright side. There's got to be some, I think it's not denial you live in. It's just this fact that you go, well, it's just going to work. There is no option. Sorry, that was a very long question to a very simple, very long answer, rather, to a very simple question.
It's that or work for somebody else. So pick your poison out.
I couldn't do that. I can work with.
You already knew you couldn't do.
I love working with people. I really love the advice from people, and I listen. And I'm not bullish to sort of bullheaded or pig-headed to think that I know everything. I know that there's everything is, you know, people are far more expert than I am. I'm a good synthesizer. Let's put it like that. I can synthesize ideas and sort of see the way through and make things happen. But you need really good people around you. And I am so thankful for the people we have on our team, because they are, thank God, far smarter than I am. And, you know, they haven't rumbled yet that, you know, I am who I am. So let's just try and keep that. Keep that.
I think you're being very modest, though, Matthew. You have such an incredible background, and you were pretty involved with Virgin Atlantic at one point, and having the ear of Richard Branson and some of these notables shows that the trust and the faith in you, and the belief that you are a solid entrepreneur and you have vision.
Thank you. It was, that was a way back, but that was fantastic fun. So that was in the late 90s. So we ended up, well, the story is that we used to have an office just down the road in Kensington from where Richard Branson ran the, you know, it's not the Virgin Group, it's the group of companies, the Virgin Group of companies. So he used to work out of his home in Holland Park. And my boss at the time, I was working with, you know, 2 or 3 other guys in a very small corporate finance firm. We used to be stockbrokers together, and we split up and set up this company. And the guy who owned the company, Rory McCarthy, great friend of mine, fantastic guy. He had the world high altitude hang gliding record, the world high altitude free fall record, same birthday as me, he's 5 years older. He wrote a letter to Richard Branson saying, "Dear Richard, we own Lindstrand balloons. I've always wanted to go around the world in a hot air balloon. It's the last great global challenge. I'd love you to come along as a pilot. What do you think?" And he wrote back, Richard Branson wrote back saying, "Dear Rory, why not? Question mark. Yours, Richard." And that letter, and that was the journey where we started. We owned Lindstrand balloons at that time. We'd bought a majority interest in Lindstrand balloons, because every corporate finance company needs to own a balloon company for this reason. And we ended up designing, Per Lindstrand, who the eponymous owner of Lindstrand balloons, designed this hot air balloon, which was a combination of a very large bubble of helium and a couple of, you know, burners underneath that would fly around the world, called a de Rosier. And so we set about building this balloon, which was called Virgin Global Challenger. And through that process, we ended up, you know, getting closer and closer to Richard and the inner circle of his advisors, who were all incredibly clever and equally scary people because of their level of, you know, intelligence and ability to execute in, you know, every way. And so we became, you know, we worked very closely with them. So we would help them look at corporate finance deals. We became, for a few years, you know, part of that group. And I was this sort of, you know, mid-20s, late 20s, and just, you know, permanently my eyes was like open like a deer in the headlights, just thinking, you know, this is fantastic. But looking back, it was the most incredible experience. And Richard was, and still is, this real energy of ability and can do. And it's almost tangible in the sense you feel this, that anything is possible. It's tempered by the sort of smart guys around him. So it's this wonderful balance of real expansion mixed with solid execution and analysis. So, you know, it's not seat of the pants stuff. It's a different environment. I've never seen anything like it since.
You know, the worst anyone could say is no. All you can do is ask, and look where it took you. Exactly. I love that. I love that story. Okay.
What do you think he thinks of crypto?
Oh, yeah.
I think it's just like everyone just think, well, there's something there. You know, there's, in the initial stages, you probably think, well, I don't really understand it, but I know there's something there. You get faint signals from the future. There's something that I have to get involved in with crypto. I don't know what it is yet, but I think it's intriguing. I mean, crypto is, you cannot stop the juggernaut. It may not be in 10 years' time anything like what it is today, but it's just this evolution. It's this butterfly coming out of the chrysalis. And we don't know what the colors are going to be, but we know that it's going to be a beautiful thing.
That's the fun part. All right. So I wanted to ask you, what is the roadmap for Quantamari?
Well, we've been around for a couple of years. We've ironed out most of the wrinkles. We're ready to go. We are working with homeowners. We're generating revenues. We're growing. We're still on track. The original idea is still there. What we're doing now is we're raising money through Republic. So it's an opportunity for people to get involved as an owner in our company with, a very small, investment. So
and Republic is a fundraising site. Anyone can go
exactly.
to Republic and invest in a multitude of companies. Is that
exactly
correct?
It's an SEC registered crowdfunding platform. It's a fabulous, great guys to work with, but it gives people the ability to invest in companies that otherwise would be hidden and just offered to to these venture capitalists. But what we're trying to do there is build an evangelical army of investors and supporters that can help us spread the word. So it's not just about the money, it's about building a movement. We call it the equity freedom movement, because we want people to understand and spread the word that there are other ways of being able to unlock your equity. So that's happening. We're just a week or couple of weeks into it, so we've got a few more weeks left of that, and then really it's just we're sort of fastening our safety belts, because we know that when the investors and the market comes back to life again, which will be very soon, we're going to be very busy people, and we're doing something that I think is going to help a lot of people, and that's important. And I don't mean to say that in a trite fashion, but it does help when you speak to these people, when you've got a solution, when they have been turned down by everyone else, and you go, yes, we can help you. That that's a good thing.
It gives people hope, and if you can give people hope that there's a better life or a better way, why wouldn't you?
Well, it's just that there's another way. Exactly. There's an alternative. So it's not just the banks. There's other things now, other ways of unlocking that thing, that big equity thing that is yours. So that's the thing. You've now got options. You've got choices, and that's going to grow. This whole shared equity or equity, non-bank equity funding is right at the very beginning, I think. I mean, even though it's about 10 years old, we're going to see it growing and growing year by year. And that's a good thing for homeowners.
Absolutely. Matthew, I can't thank you enough for taking the time to talk with us. It's been a year since we talked. It's so good to catch up with you and talk about where you are and see the progress.
And it's fabulous. Thank you so much for having me on. And I appreciate you not pressing the end button halfway through, because I would have.
Oh, no.
Oh, I already did that. Sorry.
That's right. Yes. There's no one listening. I don't blame you. You got to consider your listeners.
I could see, though, with your children coming in, the natives are getting restless. So we'll let you go be entrepreneur/dad and enjoy the rest of your day. But again, humbled you're on the podcast with us, and I'm so excited to see where you go in the future.
Thank you, Elsa. It's been my pleasure.